In this video, we are going to talk about 10 ways to finance a small business. So before start watching, please like this video and subscribe to our channel for the future updates. Your great small business idea is trapped in the hangar if you don't have any money for it. Bootstrapping, or funding your company entirely with cash flow, can get things going, but eventually you'll probably need more funding to expand, launch, or maintain your business. Fortunately, there are lots of ways to get the money you require, and regardless of your business model or sector, you can find the best ways to finance your small business and watch it grow. Every company is different. While not all of the options will be suitable for your small business, each one will require a firm base in the form of a well-thought-out business strategy or a successful track record. Typical methods of funding a small business consist of: Number 1. Traditional loans. This is financing via conventional banks, which are typically the physical banks that have a branch in your community. Although they are a significant source of capital for small businesses, these organizations are not likely to lend you all the money you require. A portion of the funds will need to be raised independently from other sources. Your chances of getting a loan from these sources are influenced by a number of things, such as your credit history, your relationship with the bank, and the amount of other debt you have. See more about the 8 steps to obtaining a small business loan here. Number 2. Alternate lenders. Although the term alternative lender has no set definition, we can define it as non-bank lenders to begin with. Some are community development organizations, supported by the SBA, CFDI, or other reliable organizations. Some are unregulated online lenders that provide rapid cash. To find out more about the choices and how to evaluate them, see our FAQ on alternative lenders. Number 3. Self-funding. For the sake of this summary, self-funding refers to any option in which you have a significant stake in the outcome or are contributing 100% of the capital. This covers personal savings, financing via credit cards, and home equity lines of credit. You and your family are the ones who are most at risk, even if it might be a simple and quick way to obtain money. You can lose your house or your life savings if the firm fails. Number 4. Crowdfunding. Recently, crowdfunding has gained a lot of attention thanks to the profitable success stories of numerous firms. And while some firms can succeed with crowdfunding, it takes a significant investment and a little bit of luck to be one of those success stories. Set attainable and realistic goals for yourself, and be prepared to heavily promote your product in advance and acknowledge some minor wins along the way. Number 5. Grants. Not only are there an astounding amount of grants available, but there are also an astounding number of limitations associated with each one. Although the headline of this blog post lists small company grant ideas, we caution that there is rarely such a thing as free money. Instead, they are typically quite competitive and highly targeted. Grants through the Small Business Technology Transfer (STTR) program can possibly be available to you. If you think this could be a useful program for you, ask your business counselor. Number 6. Private investors. Industry veterans who are retired or well off might be interested in investing in your company. If you're thinking about using this strategy, it's crucial to assess whether you're willing to take their counsel. An advisory board can serve as a conduit for counsel in this regard, and before taking funds, the investor's function, supervision, and stake should be made very apparent. Number 7. Strategic partnerships. In sectors where bigger firms are willing to help smaller ones, a strategic alliance can benefit both parties. Many biotech companies receive funding from joint ventures with pharmaceutical companies. For instance, a business such as Pfizer in the pharmaceutical sector might decide to spend capital by purchasing the rights to a medicine that is still in development or to certain research. Number 8. Angel investors. Angel investors come in early to help get your business off the ground. They can invest alone or in groups. Prior to receiving an invitation to present, there is usually a rather stringent screening process. $50,000 to $500,000 is the usual range, yet there isn't one. Angel investors aren't aiming to be involved for the long run, instead, they are focused on the exit strategy, or how they will be able to withdraw their money from the agreement. Number 9. Venture capital. Large players are typically sought after by VCs, who may require a $5 million minimum commitment. Some may go lower, but you'll probably want to work with one of the other sources provided if you don't need that much money infusion. Though the arrangements are all heavily negotiated, VCs usually stay involved for longer periods of time and are frequently looking for stock or convertible debt. Investors frequently want conditions that give them the power to remove you as CEO or to take over your business in the event that you fail to fulfill certain targets. Number 10. Friends and family. People you love frequently possess a special blend of faith in you and a desire to see your business succeed. Getting cash from friends and family is a sort of informal crowdfunding that requires careful consideration. It could come in the form of a loan, an early inheritance, or a kind donation. Regardless of format, it is imperative to record all pertinent information and expectations in writing. Respect the principles of sound business, and wait to implement your plan of action until you have secured sufficient funds. It would be alluring to go with a $50,000 donation from a kind aunt, but no matter how well-intentioned you are, you won't succeed if your company needs $100,000 to be profitable. Consider the effect that each purchase will have on future Thanksgiving dinners. What do you think about our videos? Let me know in the comments section below. If you enjoy this video and want to hear from me again, be sure to hit the subscribe button before you go. Thanks for watching.